Lena is counting silk dresses at 9:18 p.m. One hand on the rack, one eye on the Shopify dashboard. Sales are up. Cash feels weirdly thinner. 3 months ago, she added buy now, pay later at checkout. Customers stopped hesitating on $180 outfits. Average order value jumped almost overnight. Then the first refund problem arrived. A customer returned a blazer, but the installment payment still hit her bank that Friday. Lena had thought BNPL was just a conversion button. Cleaner than coupons. Easier than layaway. A little fee in exchange for fewer abandoned carts. But checkout financing is not just marketing anymore. It touches returns, disputes, staff training, customer expectations, and in some cases, credit reporting. That is today's signal. BNPL is moving from sales lift to operations risk, not panic. Just a place where small retailers need sharper systems. Lena runs Maple and Thread, a 5-person boutique with rent, payroll, and seasonal inventory breathing down her neck every single month. Her BNPL provider charged more than card processing, but bigger baskets seemed worth it. Customers added shoes, jewelry, and gifts they might have skipped. The CFPB describes BNPL as typically a 4-payment, no-interest loan used for retail purchases and says the market expanded between 2019 and 2023. For a small shop, that growth matters because customers now expect installment choices in places that once only took cards, cash, and store credit. The trouble started when Lena's associate Priya handled a return like any normal card refund. Smile, scan, back to the original payment method. In 2024, the CFPB said certain BNPL lenders using digital user accounts are card issuers under Regulation Z. That CFPB rule points to protections around periodic statements and billing disputes. Translation for retailers: customer confusion may land at your counter first. The customer was not angry at a lender. She was angry at Lena's shop because that is where the purchase felt real. Priya could only say, "We processed the refund," but she could not explain when installments would stop, reverse, or settle. Cause: that is the gap. The store sold the dress. The lender financed the dress. The customer expected one clean answer. Experian said, Affirm planned to report all pay over time loans issued from April 1, 2025 onward, including Pay in 4. TransUnion announced Affirm would report all pay over time products issued from May 1, 2025 onward, including Pay in 4 and monthly installments. TransUnion also said those transactions would not affect traditional scores near term, but could factor into future scoring models. For Lena, the credit file detail changed the tone. A delayed refund was no longer just annoying. It felt personal to the customer. If you offer BNPL, consider treating it like a separate payment lien, not a sticker next to Visa and Apple Pay. Start with 4 questions. What fee do you pay? Who handles disputes? How fast do refunds settle? What does the customer see? Pull your merchant agreement today. Search for refund timing, dispute liability, partial returns, shipping disputes, and chargebacks. Highlight anything your staff cannot explain. Then rewrite your return policy in human language. Not legal fog, human language. Customers need to know where the money goes. Lena's old policy said refunds return to the original payment method within 5 to 7 business days. That sounded fine until installments entered. The CFPB's market report says BNPL continued expanding from 2019 through 2023, which means more shoppers may already assume it works everywhere. That assumption creates pressure. People think checkout should be instant, returns should be instant, and financing should somehow disappear instantly too. Create a checkout script. Something simple: financing approval, repayment schedule, and account questions are handled by the BNPL provider, not our store. Create a return script too. We can process the return here, and your financing provider controls how installments update afterward. That sentence may feel awkward. Say it anyway. Clarity early tends to prevent a much harder conversation 3 days later. Lena trained her team on Saturday morning before opening. 15 minutes. Coffee on the counter. 3 scenarios on blank index cards. Scenario 1, full return. Scenario 2, partial return. Scenario 3, customer disputes a payment but still has the item. You do not need your staff giving credit advice. In fact, they should not. They need a clean handoff path. Because the CFPB rule connects covered BNPL accounts to billing dispute provisions, retailers should expect more formal language around customer complaints. That does not mean every return becomes a regulatory problem. It means your frontline needs fewer guesses and better guardrails. Build a one-page BNPL playbook. Include provider support links, refund steps, escalation rules, and the exact words staff should use. Keep it beside the register, but also train the Saturday crew, seasonal help, and whoever answers Instagram messages after dinner. The second operational move is measuring BNPL separately. Many retailers blend it into card sales and miss the real margin picture. Lena's BNPL orders were bigger, but they also had more size-related returns, especially occasion dresses bought for one weekend. For 90 days, track BNPL average order value, return rate, dispute rate, provider fees, shipping cost, and net margin after returns. Do not judge by revenue alone. A $228 cart with a $28 return cost can be less helpful than it looks. Softly, this is where founders feel the sting. The sale was real. The excitement was real. The margin was not what the dashboard promised. If your BNPL margin is thin, consider tightening eligible categories. Maybe final sale accessories qualify, but high return formal wear does not. You can also test thresholds. Maybe BNPL appears above $75 but not on $18 impulse items where fees eat the win. Before changing settings, run your specific numbers with your bookkeeper. Results vary based on category, season, margins, and return behavior. The third move is customer education without scaring people. You are not warning them away. You are setting expectations. Lena added a short checkout note. Returns are processed by Maple and Thread. Repayment updates are handled by the financing provider. On receipts, order emails, and return pages, use the same language. Consistency may reduce the feeling that customers are being bounced around. Add a support path. Contact us for product returns. Contact the provider for payment schedule, account access, or repayment questions. Credit reporting is provider-specific, but a firm's 2025 Experian and TransUnion announcements show why retailers should know what partners tell borrowers. So ask your provider directly, do you report paying for? To which bureaus? What happens after refunds, disputes, and late payments? Do not bury those answers in your own head. Put them into training, policy, and customer service macros. If the provider changes reporting, fees, or dispute rules, treat it like a payroll tax notice. Review it. Document it. Update the team. Set a quarterly reminder to review payment methods. Card fees change. Fraud patterns change. BNPL rules and reporting practices can change too. One practical benchmark: if a payment method causes more staff time than profit, the fee is not the whole cost. Exhale, Lena learned that through a $180 blazer, 40 minutes of staff time, and one customer who almost never came back. She called the customer personally, not to debate, to explain the return, send provider contact details, and offer a future tailoring credit. That credit cost Lena $25. Keeping trust with a repeat buyer was worth more than winning the argument. Your version might be different. Maybe you pause BNPL. Maybe you keep it online only. Maybe you restrict it to full-price inventory. The point is not that BNPL is bad. The point is that financing creates workflows, and workflows need owners. Pick one owner for BNPL. That person monitors provider notices, return issues, dispute trends, and staff questions every month. Then run a monthly 10-minute review: BNPL sales, returns, disputes, fees, and customer complaints. Short meeting. Real signal. If the numbers help, keep going. If they wobble, adjust. Small businesses survive by noticing sooner, not pretending harder. After 3 months, Lena kept BNPL, but changed the rules. Formal wear needed staff approval. Sale items were excluded. Returns had scripts. Her average order value stayed higher, though not as high as before. More importantly, refund drama dropped and the team sounded confident. That is the founder lesson. Growth that creates confusion is not really growth yet, it is a system asking to be finished. If this helped you catch one hidden workflow, tap follow or subscribe. We are building calmer businesses together, one practical signal at a time. Your checkout is not just a place where money enters. It is where promises begin: payment promises, return promises, trust promises. So, before you add or expand BNPL, ask whether your people, policies, and provider knowledge match the product you are offering. Warmly, because customers remember the sale, but they really remember how you handled the moment when the sale got complicated. This content is for educational and informational purposes only and does not constitute financial advice. Always consult with a qualified financial advisor or business consultant before making significant financial decisions. In plain English, not financial advice. This week, pull the agreement, write the scripts, and track the margin. Do those 3 things before the next busy season hits. Small businesses do not need perfect systems. We need honest ones, visible ones, and systems the whole team can actually use.